Alright, ladies and gentlemen, we got a lot to talk about here in this video, and I really don't want to waste too much time, but here is a quick overview. We got to talk about the margin calls that are happening today and why the markets are dramatically selling off. The S&P is now officially in a bear market, down 20% year to date. The NASDAQ is down 30% year to date. We need to talk about what is going to happen next week is going to be very important because we have the FOMC minutes. We have a lot of economic data, some retail data that is coming out that will move the markets in a very substantial way, but really the FOMC minutes will be very important. Now, I will say during a market like this where it is so volatile, it's not uncommon to see Friday sell-offs. After all, I'm sure you guys have heard of Black Monday that happened in 1987. It was because everyone sold out on Friday and then they freaked out yet again on Monday, and the stock market fell about 20% on Black Monday. So it's very common to actually see this during market volatility, but where we are currently at, even if you look at the FINRA margin debt, it's only went down just a little bit in the last month. March has been very brutal for the stock market though, and I do think you are starting to see margin calls on an even larger scale. So we are going to dive into all of this key information. Hit that like button and subscribe to the channel. Make sure to source your comments, questions, or concerns down below in the comment section. Would love to hear from you guys. What are you buying for the long term? Are you buying AMC? What are you buying, baby? Let me know that info because this is likely one of the last great buying opportunities that we are going to see for the next 5 or 10 years. So let's get straight into this information. And AMC stock, let's first off start with that briefly. I do just want to go over the Ortex data, get that out of the way, and then we'll get into more of this macro data, really what is going on under the surface. And the thing that I do want to point out is that you have a massive buy order that has been at 1150 for a while. We were just trading at 1151 and this order was getting hit, and it was for like 40,000 shares. Now it's for 11,000 shares. It keeps going up as well. So I think the intraday bottom will be about $11.50 per share. This looks like a market maker that is trying to hold the stock up above 1150. So there is that. As far as the option activity, you're looking at positive order value of 92%, 7 orders totaling $2.33 million. So a lot of positive activity overall as far as the option chain is concerned. A couple puts that are coming through, but by and large, a lot more calls that are going through. Look at this one, December 16th, $35 call, $20 call for September, $12.50 call for May 27th. That is just next week. And then you do have a June 17th $11 call, and then like we said yesterday, a January 19th 2024 $50 call. So you're seeing some out of the money call activity, which is definitely a good sign. And as we do get further into these margin calls, if AMC can counteract what is going on in a portfolio, and what I mean by that, if you think about a portfolio, you have short positions on stocks, AMC's down 11.5% today, you're making money on that. Your portfolio is going down, but you're still making money on your short positions. Well, what if your portfolio starts to go down and then AMC starts to go up? You're losing on both sides, and due to the liquidity situation, the lack of liquidity that we are seeing in the markets, that's where you can start to get into these massive rallies that I think are coming here in the next couple of weeks for AMC stock. That's just my personal opinion. I do plan to buy at least one more option by the end of the day today. If you guys want access to all of my trades in real time, link down below in the pinned comment to do so for that one. Appreciate every single one of you guys that has joined that, and hopefully you make some good money. We have hit some massive trades there just this year alone. So the short interest of free float is sitting at 21.98%, almost 22%. We do have a record amount of shares out on loan, 159.86 million. It says the current shares that are sold short of 113.29 million. So we do have a lot of shares that are out on loan that could be used against us, and they're likely being used against us today. Now, you're only seeing borrowed shares of 1.1 million, return shares 1.86 million for the day. So these numbers are not accurate, and we'll see what happens coming on Monday, what the actual borrowed shares number was, and potentially that could explain why the stock is down 11.5%, but we won't know until Monday because the T+2 cent sediment time. The utilization is at 100% and the days to cover is sitting at 3.22. So looking good across the board right here. You really can't ask for too much, including all of the put activity on AMC stock. The real short interest is much higher, and those market maker shorts, they're much more liquid, so they're a lot faster to actually short the stock or to cover on the stock, depending on what happens to the stock on an intraday basis, what kind of calls are running into the money, what kind of puts that are running out of the money. So that is that. That's what you guys need to know. Now, as far as the broad markets, what is actually happening today? The Nasdaq is down about 2.5%. S&P down 1.62%. The Dow Jones Industrial Average is down 1.3%. And we really have three things that are going on today. You do have this. This says recession is likely. Former SEC chief economist says. Here's his advice for how to prepare. So a lot of negative talks about a recession. And then you have this monkeypox. And Scott Gottlieb says rising monkeypox cases suggest it's spread pretty wide. And then this. Finnish gas supplies from Russia to be halted. Russia considers bill to let over 40s into military. So you're seeing, the situation is not really getting better in Russia. You have this new virus and you have more concerns about a recession. And it is Friday after all. So it does not surprise me that you're seeing this. I mean, it's not a huge down day relative to like what we are used to, but it is still pretty substantial. And you are seeing the VIX up about 6.5% today. So all in all, I think that's what is really going on, what is causing these moves today. You did have Fed Bullard that actually spoke earlier that did not say some very good things, basically, talking about a recession, that it is likely that it's probably going to happen here, in the next 6 to 12 months. So that was not seen as a good thing as well, and I think that is really freaking people out here on Friday. So that is basically that. But this whole margin call situation, that's what is really intriguing to me, because when I looked at the FINRA margin debt, I expected this number to be much lower, much lower. The FINRA margin debt in March was $799 billion. Look at the margin debt in April, $772 billion. Considering the markets have fallen now 20% in the S&P and 30% in the Nasdaq today, year to date, only in 5 months, you would expect to see the margin debt much lower than this. Much lower, or at least going down at a faster pace. We only dropped like $27 billion in margin debt. That's like that's like 5% of the total margin debt outstanding, maybe a little bit less than that. And you're seeing this huge market crash, essentially. So what this really boils down to, in my personal opinion, is that we are one big bad catalyst away from seeing a full-on market liquidation. And what that means is potentially, more 5 or 10% down days in the stock market. Because consider this for a second. Margin debt through this whole sell-off from January 2022, margin debt was $829 billion. Margin debt in April, $772 billion. So you've only went down about $50 billion in margin debt. So you're pretty much at the same level of margin debt. Now, relatively speaking, it's went down a little bit, but you're pretty much still up there, even though values for equities have went down quite substantially. So you're really seeing this disconnect here. High levels of margin, portfolio values dropping. If you get another bad catalyst and you take another big hit, you're going to start to introduce massive rounds of margin calls in a very, very short amount of time, especially if you do see a lot of the stocks people are hiding out in, a lot of your consumer staples, a lot of your pharmaceutical companies, a lot of these companies where people have flooded money into as kind of like a safe haven. If those start to get destroyed, at the same time, the stocks with a lot of short interest start to rally, like we've kind of seen over the past couple of days with AMC, with SoFi, with DraftKings, with Affirm, then you're going to be in a really bad situation for the overall markets, and that's kind of something that is quite concerning to me. And if you do look at the margin calls from Google Trends, the only time that we have ever been higher than this was the crash of 2020 and 2008. We have been higher than this from January to June, but that was mostly because of the margin calls with GameStop and AMC. Other than that, this is the third highest time that we have been in the last 20 years. So you're starting to get more people talking about margin calls, and this is really the time zone I would focus in on, really from right here, October 21st, October 2021 to now. You're at the highest level we have seen in the past 7 months for the searches of margin calls. So it's no doubt that you have seen some level of margin calls, but you're not quite there on a market basis, and that's just the wildest thing, because the S&P is down 20%, NASDAQ is down 30%, and you're still not at a situation where like you've seen the margin debt drop in a substantial way. It still has not dropped in that substantial way. Kind of ridiculous. Now let's go over exactly what to expect for the economic data for next week, and we'll go ahead and take a look at this. So you have new home sales coming on Tuesday, and that's pretty much it. You have durable goods orders month over month for April. That comes on Wednesday. Some more market mortgage data, and then you have the FOMC minutes that comes on Wednesday as well. That does come out at 1 p.m. You also have Fed Brainerd that speaks at 11:15 a.m. on Wednesday. And then on Thursday, you have GDP growth rate quarter over quarter. So next week, you could possibly go into a technical recession, and you have the FOMC minutes. So I think next week could be pretty bad in a weird way. I've been kind of bullish on a lot of stocks that are down dramatically, but with this kind of potential bad news coming next week, it could get worse from here, especially when you're sitting at a very important level where if the markets take another 5 or 10% move down, you're going to see massive waves of margin calls, and there's no Fed to step in and save the day. Could get pretty interesting next week. Then you do have personal income month over month. That comes out at 7:30 a.m. on Friday. Personal spending month over month, 7:30 a.m. on Friday as well. PCE price index year over year, PCE price index month over month. The Fed does like to pay attention to this quite a lot. Wholesale inventories month over month, goods trade balance month over month, Michigan consumer sentiment at 9 a.m. as well. Apologize. So you have a lot of economic data for next week. And most importantly, the Fed minutes, the PCE data, as well as the quarter over quarter GDP numbers. You could go into a technical recession starting next week. You could have the Fed outline a more aggressive plan to raise rates. Overall, I kind of do expect some more downside from here, but not really on a lot of stocks that we invest in. Like, I don't think AMC is going to drop to $5 from here. I don't think it's really going to go under $10 for a long amount of time, even if the markets do take another big move down. So that's pretty much going to be all for this video. That's what you guys need to know. The technical levels on AMC completely fell apart today, just to be honest with you guys. AMC is now sitting at $11.60 per share, down 11.47%. So that was obviously not such a good thing. We wanted to hold above 13, but considering what the markets are actually doing today, doesn't necessarily surprise me that AMC is down 11.50%. Or 11.5%. Watch that low at about $10 per share. We really didn't close under there yet this year. We did touch $9.70, but watch to see if we can remain above 10, or if we do close under 10. That's going to be important. I really don't expect to go under 11.50 for the day due to this very large block order that is still just sitting here and honestly just hanging out. Right. Let's go ahead and just a lot of activity around 11.50, and it does say the short interest is now at 22% for AMC stock. Absolutely ridiculous. The MACD is neutral, and the RSI completely just on the oversold side, now at 36.12. Neutral is 50, so not looking so good. Lots of room to potentially come up from here if next week's data is good. FOMC minutes is not bad. Retail sales is good. Personal income's good. The Fed's good. It could go either way. But I think just the fear of that could have a pretty bad Monday, Tuesday, or Wednesday before the Fed minutes do come out. So that is pretty much going to be all for this video. Hit that like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Thank you guys for tuning in, and I will see you in the next one.